Hello, it's Friday the 23rd of July. My name is Neil Shearing. I'm the Group Chief Economist at Capital Economics, and this is your week at Capital Economics. And it's been one in which the rapid spread of the Delta variant of the coronavirus has been again at the front and centre of our attention. It did, of course, rattle financial markets earlier this week since stabilised, but it was a major theme of the economic outlooks that we published on several services this week on the US, the Eurozone, China, our assets allocation service too. Next week, we will be publishing our flagship global economic outlook, and we'll have more to say in that. But in general, we're sticking to the view that this shouldn't derail the recoveries in advanced economies. It may push them back a few months, but it shouldn't derail them altogether. Much bigger risk in emerging economies, though. And of course, it's a reminder that the virus is here to stay. It's here for the long term. We're going to have to get used to living with it. It was also a week in which central banks were front and centre of our attention. In particular, yesterday, when the ECB met and started to put some flesh on the bones of its new inflation target regime. In general, it's fair to say the language was a bit more dovish than both the markets and perhaps ourselves had expected, but it does reinforce our expectation, our long-term forecast, long-held forecast, that policy tightening in the Eurozone is not going to be on the agenda for a long time to come. It's going to lag behind the Fed, Bank of England by a long way in that regard. Finally, while we're on the topic of central banks, several speeches from MPC members in the UK over the past week, but the one that really caught our attention was one by Jonathan Haskell, an external member of the MPC, in the middle of last week, in which he made the case that the pandemic he didn't think was going to cause long-term scarring to the UK economy. Of course, that's a position that we've sketched out for a long time now. In fact, it was an argument we were making about this time last year, that this crisis was different, a major impact in terms of big cyclical downturn, big sharp falls in output in the short term, but that ultimately economies would get back to their pre-virus trends of output. Now it looks like policymakers are starting to come around to that view too. So lots going on, really busy week. Thanks very much as ever for reading our research. Thanks very much for listening, and we'll speak again next week. Goodbye.